morning and welcome back to Morning Markets from True Potential. Paul Durrance, Investment Director. If we could just start as a reminder to you all, please do subscribe in order to receive the daily updates of Morning Markets as well as our weekly podcasts that come out on a Friday. This morning we'll quickly look at how equity markets performed yesterday. As you'd expect, a quiet day here in the UK and also in Europe with equity markets shut for the bank holiday. US equities were open, however they were flat for the day. We'll be focusing on Chinese data, economic growth data that came out for Q1 for this year, as well as why they have lowered interest rates. In terms of the background to this, China is one of the largest manufacturing of goods and exports of goods, and they have increasingly become more dominant on the world stage, both from an economic point of view but also in terms of financial markets. If China economic growth is doing very well, which it has been for the last 2 decades, then that is great for global growth. Digging into the details, what we saw was for the first quarter of this year, Chinese growth hit 1.7%. This is way higher than what was expected, 0.7%, which puts them on an annualized growth of 4.8%. This is good given the challenges that China's economy is facing today. They continue to stick with that very strict zero COVID policy, which is meaning millions of people in China in lockdown, and that's curtailing sentiment and consumption. And they're also challenged by regulation that they tightened in last year in the property sector, which is really challenging a large proportion of their economy. Countering that, fixed asset investment continues to do well, as well as their industrial sector, which is a big part of their economy. At the start of the year, the Chinese policymakers set out to achieve a 5.5% economic growth, which is relatively low compared to previous years, given the challenges that they are facing. However, the calls from economists and markets have been expecting them to lower interest rates in order to achieve that target. What we saw on Friday was that they actually did lower interest rates, but less than what was expected. They lowered interest rates by just 0.25% rather than the 0.5% expected. The challenge for policymakers, whilst the environment is relatively stable, the challenge is that inflation is high, and that's creeping into China's economy, even though inflation in their economy is lower than what we have than here in the UK and in the US. They're in a really difficult place that they need to stimulate economic growth in order to achieve that 5.5% by the end of the year, but ensuring that inflation doesn't get out of control and impact the consumers. That's everything from us today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.